Let's jump right into this explainer, breaking down the HDFC Bank flexi-benefits prepaid card. If you're a corporate admin or an employee getting company allowances, you'll want to pay close attention. We're looking at a highly specialized tool designed specifically to streamline those corporate perks. It's not your everyday credit card, and honestly, understanding how this whole system works can save your organization a ton of time and, more importantly, save employees some serious money in taxes.
So, before we get into the nitty-gritty rules and numbers, let's establish what this actually is. The Flexi Benefits prepaid card is a consolidated corporate employee benefits tool. And note that phrase, it's not a standard credit line. You aren't borrowing money from the bank here. Instead, it's a completely digital solution used to distribute and manage tax-saving allowances. Think of it as a modern upgrade to escape the absolute headache of juggling physical paper vouchers for meals, fuel, or travel. Everything goes digital.
Here's a quick look at our agenda for today. We're going to cover the corporate prepaid solution, break down the base fees, look at the dual benefits, dive into KYC rules, navigate the security settings, and wrap up with a final verdict. Let's get to it. Moving into Section 1, the corporate prepaid solution, managing allowances the modern way. Okay, so instead of having one clunky system for meal vouchers, another for fuel reimbursements, and yet another for telecom bills or leave travel allowance, LTA, this card takes all of that and consolidates it onto one single piece of plastic. It has specific built-in wallets for meals, fuel, telecom, LTA, and even corporate reward and recognition programs. Plus, the physical card itself comes with a really convenient 5-year validity, which is great because it means HR isn't constantly pulling their hair out reissuing cards every single year. Section 2. Card fees and charges. Let's understand the base costs. The issuance or joining fee is exactly 135 rupees. Now, as with basically all banking products, you do need to keep in mind that an 18% GST applies on top of this base number. But as a baseline, 135 rupees is your starting point to get the card issued. And you're going to see that exact same 135 rupee fee apply for annual renewals too. So, keeping the card active costs 135 rupees plus GST every year. Oh, and if an employee happens to lose or damage their card, you guessed it, the replacement fee is exactly 135 rupees. It's a very flat, predictable cost model. Finally, there's a tiny operational fee you should definitely be aware of. A 10 rupee fee, plus taxes, hits any time an employee physically checks their balance at an ATM. And that applies whether you're using an HDFC Bank ATM or some other bank's machine. But don't worry, as we'll see in a second, there are completely free digital ways to check your balance, so you can easily avoid this. Let's look at Section 3, Employer and Employee Benefits, or what we call a dual advantage. The beauty of this card is that it works for both sides of the aisle. For employers, you get a centralized tracking dashboard that drastically reduces paperwork, cuts down operational costs, and totally eases the administrative burden. It features a digital KYC process, which is especially seamless for existing HDFC customers, and allows for super easy bulk loading of funds. On the flip side, the biggest draw for employees? Tax benefits. Employees get tax-free allowances based on how their specific wallets are set up. Plus, they get the incredible convenience of carrying just one single card, and they get access to a unified portal to check their balance in real time. Say goodbye to that 10 rupee ATM fee. Additionally, this isn't just about standard allowances. If your company uses the reward and recognition feature, any reward points an employee generates can be tracked and redeemed instantly, literally at the push of a button. It all lives on that same unified management portal, which makes the rewards experience incredibly frictionless. Section 4 is all about KYC rules and limitations. We need to talk about the strict digital loading limits. Basically, your identity verification status totally dictates your flexibility here. If an employee completes full KYC, they've got a lot of breathing room. There are no strict monthly or annual load limits, though the maximum outstanding balance at any given time can't exceed 2 lakh rupees. But if someone is only on small or minimum KYC, things get tight. They are capped at loading just 10,000 rupees a month and a maximum of 120,000 rupees per year. So if your company hands out large allowances, making sure your team completes full KYC is absolutely essential, so you don't run into failed corporate transfers. It's also super important to remember how this differs from your standard debit card. Cash loading onto the card and fund transfers out from the card are strictly prohibited. You can't just walk into a bank branch, hand them cash, and ask them to load it up. The funds have to be loaded digitally via the corporate portal by the employer.
Section 5, Security and Card Management. Let's navigate those default restrictions.
Why isn't my flexi-benefits card working for online purchases? Right? This is probably the #1 question employees fire at their HR departments the minute they get the card and try to, say, order lunch online. The answer actually boils down to standard regulatory security guidelines meant to protect your money. By default, point-of-sale transactions, swiping or tapping your card physically at a store, those are good to go. But e-commerce, meaning online shopping, and contactless tap-to-pay are completely disabled out of the box. To fix it, you just follow 3 quick steps. First, log into the dedicated HDFC HaPay portal. Second, go to the My Card tab and hit Manage Card. And third, just manually toggle those switches to enable e-com and contactless. It literally takes 2 minutes. But if nobody tells you about it, your online orders will just keep failing. There's also a strict inactivity policy from the Reserve Bank of India you need to know about. If the card goes 12 consecutive months without a single financial transaction, it automatically becomes inactive and temporarily blocks itself. The bank will send you a notice, but if it happens, the user has to proactively log into the portal or call phone banking to unlock it. And here's a pro tip for you. Once you do unblock it, you have to use it before midnight that exact same day, or it will lock itself right back up.
Section 6, Final Pros and Cons. Let's get to our objective verdict.
Ultimately, this card is a brilliant digital solution for corporates. The pros are huge. It beautifully consolidates meal, fuel, and travel allowances. It gives employees tangible tax savings, and it hands HR an incredibly powerful, centralized dashboard with digital KYC. But you do have to weigh those against the cons. You're paying 135 rupees for issuance and renewals. ATM balance checks will cost you. You absolutely have to manage those strict KYC loading limits, remind your team to manually toggle their e-commerce settings, and remember that no cash loading is permitted. So based on everything we've unpacked in this explainer today, take a hard look at your own organization's processes. Is your company fully maximizing modern digital benefit management? Or are you kind of still relying on outdated paperwork, leaving operational efficiency and your employees' tax savings on the table? It's a great question to ask your HR and finance teams tomorrow morning. Thanks for joining me to break this down, and keep learning.